Barrel rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno-monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager.
Good morning, I'm Professor Code and this is the Forex Super Model daily briefing for Thursday the 29th of the 4th, 2021. The time is just coming up to 0500 GMT, Asian session coming to a close, European session firing up, our lunchtime North American session. Right, Wednesday the 28th, yesterday then, we had a positive opposed driver in the euro, plus 72, front and back door flows, mainly coming out of the dollar at minus 65, out of the yen at minus 29, and the pound was the positive rock at plus 22, activity plus or minus 94. Intra-week then becoming more relevant, this is from Monday the 26th open to roughly about 15 minutes ago. We've got a negative opposed driver in the yen at minus 371, front and back door flows, mainly going into the pound at plus 273, into the euro at plus 152, and the dollar was the negative rock at minus 54, activity plus or minus 425. Intraday then, this is the Asian session to about 15 minutes ago. We've got a positive driver in opposed driver in the pound at plus 37, front and back door flows, mainly coming out of the yen at minus 32, out of the dollar at minus 26, and into the euro at plus 21 is the positive rock. Activity plus or minus 58 then. What's going to knock it about, or what has knocked it about? We had the Fed yesterday, early evening, generally not rocking the boat, dovish as we suggested, and the dollar's basically been weak ever since, or sold off. Now today we've got Thursday, we've got German consumer prices, US GDP, and we've got tier 2 German unemployment rate. Right, Friday then, tomorrow, we've got China manufacturing and non-manufacturing PMIs, German GDP and Euro zone CPI. Right, so let's have a look at the flows. We've got the Euro complex as a whole, it's strong except against the pound. The yen is weak except against the dollar and the AUD. We've got the pound is strong across the board. The Swiss franc is strong except against the euro and the pound. The CAD is strong except against the Swiss, the euro and the pound. The AUD is weak across the board. The NZD is weak except against the AUD, the dollar and the yen. And the dollar is weak except against the yen and the AUD. So what have we got? We've got pound strength across the board, AUD weakness across the board. So let's have a look at the asset flows, the asset classes. So let's just get rid of this and start off with the US dollar index. US dollar index. So we've got let's have a look. Basically, it's broken, and then it's dropped down to 0.3 to the modelled floor, just from the modelled floor. Gold then. Gold had this double top. It dropped and then it dropped again. It's now just above this previous support, and that's about 0.242 from the modelled floor. Oil has actually come up and is looking at 0.28 from the high. A weaker dollar never does, nor normally never does oil any harm. Right, so Wall Street, what have we got? Wall Street broke. It's had a significant rise and it's just come back a little bit. S&P had this double top, it broke, and it's now slightly on the up from there. So and tech took a long time to break, and it's flatlining above that break now. So we've got US 10-year on the bond, and the bond US 10-year basically is 0.33 from the floor. This is the price, so the price has bounced, yields have come off. The bond is about 0.28 from the floor. Arguably we've still got this situation with European yields now starting to outgun US yields. So this has a positive effect on the euro dollar. Right, copper. Copper, remember, had 5 pumps. Went back to the second pump, went back to base camp, and it's now significantly broken that top pump. So copper has basically outperformed now. US steel. US steel sold off at the double top. Broke the double top resistance and has come back to about 0.33 from the high. So US steel is hanging in there, but it's not really quite getting going again yet. Right, so let's just summarise what's been going on, and a lot's been going on. So we've got this general macroeconomic picture panning out now. We've got, if you look at the dollar, the euro, the yen and the pound in terms of the majors, you've got this general weakness in the dollar going forward off the back of massive fiscal stimulus printing and inflating away the debt. So if you've got dollar weakness despite a strong data cycle, and you've got so a weak dollar will transmit into a positive for equities, commodities. We're already starting to see oil come up, and then this scenario, the equity transmission will lead to normally a weakening of the yen. So if you've got these two majors outflows, the only place for them to go is the euro and the pound. So you've got a positive, a de facto on the euro by default, and a positive on the pound complex. Now the pound complex has got the most elbow room to go up. So if you're looking at the flows, that's why we're basically short the dollar against the euro, the pound and the AUD, and we're short the NZD against the euro, the pound, the CAD and the AUD. And you're obviously going to get commodity currencies, commodity FX, the CAD, the AUD and the NZD getting boosted. But the NZD is pumped in these particular areas that we've just mentioned, and as such we believe you're going to get an outperformance. The one to really look at going forward is the pound NZD, and expect long pound NZD to really start kicking in now. We've been saying this for weeks, almost months now, but it looks like it's starting to happen. We've added yet another long trade to pound NZD. So I hope that helps. See you tomorrow for the daily briefing. Thank you very much.